Hey everybody, this is RC Peck, and this is my weekend podcast. Hope you all are doing well. There's a thought that's been going through my mind lately, and it has to do with what we are in control of ourselves. And I mentioned in a previous podcast that I am giving up refined sugar, white sugar in my diet, and I'm on day 13 of that. So we'll see how that goes. But the question also is, what are we in control of in the stock market or in the bond market, commodity market, currency market, basically in the investment world? And a lot of times people think that we don't have a lot of control. We're really at the mercy of a lot of things going on. But I actually have to differ and say that there's a lot that we can control if we have the right strategy and investing in the right strategy and not necessarily investing in the quote-unquote right symbol. So I have three charts I want to show you, and the first chart is the yield of the 10-year Treasury. And if you look at this screen here, you can see the red line at the top. Now, we're not in control of what the yield is on the 10-year Treasury, but we are in control of what type of strategy we can use to benefit the direction of the 10-year Treasury. Now, the 10-year Treasury bottomed in July of 2012, and I do not believe we will ever see 1.43% yield on the 10-year Treasury again. And for the next 30 years, the yield will be going up, though not straight up. So we don't necessarily need to be getting all freaked out and crazy because the yield has bottomed or has made a bottom after 33 years. We're in control of perspective and having perspective. We're in control of knowing that yields over long periods move slowly up and move slowly down, and we've just entered into the phase where yields will be moving slowly up over the next 3 decades. We're in control of knowing that, and then we can talk about what strategies to implement to know that yields will be going up on the 10-year Treasury, which means yields will be going up on a lot of other instruments over the next 3 decades. Again, what are you in control of and what are you not in control of? So that's one, the 10-year Treasury. And if you look at the upper right part of this price chart, you'll just notice that the 10-year Treasury completely dropped yesterday on Friday on a bad jobs report coming out in the United States. I just find it interesting that the bond market seems to be more attuned with what's going on in this country and the world with money printing than the stock market. But again, we're not in control of whether that's right or that's wrong, or whether it morally should be going up or morally should be going down. The bond price is falling. On this chart, you see the bond yield, it's going up. We should just go with that because that's the trend. We are in control of noticing which direction, not necessarily whether it should be going up or should be going down. The next price chart is the S&P 500. And if you look at this one, you'll see that the red line almost is in the middle of this price chart. And the price as of close on Friday is about 17.5% above that red line. Now that red line is its old 2007 and its old 2000 high. So that was a pretty significant line to break. But right now the S&P 500 is trending higher. Now it's looking like a very scary rising wedge, but it is moving higher and it is above its lifetime high. Again, we can't control whether it should be above or it shouldn't be above, or whether it should have gone up 25% last year or 10% the year before, or whether it should have gone up at all since Bernanke, Yellen, Greenspan have been printing money and manipulating rates. But the thing is, it is going up. What we can control is the strategy we use. What we can control is just noticing the direction, and the direction is clearly up. Even if we have a 5 or 10% correction this year, as long as the price stays above that red line, the S&P is in new lifetime highs, and whenever anything is in new lifetime highs, it has a strong tendency to just want to continue to go higher and higher. And we are in control of just noticing what it's doing and not making moral judgment on whether it should be going up or shouldn't be going up. It's going up. And what's great is we have the market probability strategy that has us fully in the market and is taking full advantage of the stock market going up. And again, it's not passing judgment whether it should or shouldn't. So again, we have control over a lot more than we think we do. The last price chart I want to show you is gold. And the red horizontal line that you see here, that price is at 1188. Actually, it's 1188 underneath. If you look back in December, that's 1188 right under it. That's right about $1,200 for an ounce of gold. Now, I'm showing you GLD because it's easier for me to show you this with the close of the day. We can't control what gold is doing. Gold fell 28% in 2013, which, if you were able to just zoom back and get perspective, falling 28% after 13 years of going up, or the previous 12 years going up and having a 28% correction. If this was the stock market, everyone would be like, hey, it should have had a 28% correction. But here we are with gold. It fell 28% last year, which means silver fell more, which means precious metal mining stocks fell much more, which means small cap precious metal mining stocks fell much, much more. But again, we aren't in control of which direction gold goes. We're only in control of the strategies we use. And even if you use a buy and collect, buy gold or buy silver each month, you're in control of that, and part of you wants to own more gold. Now, the question is, has gold bottomed? Is this 1188 intraday or this 1200 generally, is that the bottom? Is that where the battle is going to be fought on how low gold goes? The answer is probably not. This is a long downtrend. It started in September of 2011. So we are 2 years into this. There was a downtrend in the middle of the 70s, all through 1974 and 1975. That was 2 years. That had gold fall 50%. So far, from the peak of gold in September of 2011 to the very low in December of just this last year, about a month ago, gold's fallen about 35%. So if history is any indicator, it's very likely, there's a very high probability we have a little bit more downside to gold, 10 to 20% more downside to gold. But of course it doesn't have to. But the trend is down. Again, what are we in control of? We're not in control of the direction, but we are in control of having perspective. We are in control of noticing that it is incredibly painful to own something that no one else owns that you may have lost money on. And a lot of people are feeling very, very bad that they have had anything to do with gold the last 2 years. And this is part of bull markets. Bull markets are supposed to bring the least amount of people with them. You're in control of knowing that and stepping out of yourself and talking to other people and going, you're right, bull markets have to make it feel bad at certain points because everyone can't be on board for the entire 18 years. That's not how bull markets work. So we're actually in control of a lot more than we think we are. And just for yourself, whether it's your diet or your health, or in this case, looking at investment strategies or investing your money, what are you in control of? You are in control of the strategies that you use. We are not in control of what the markets do. We are not in control of what the Fed does. We are not in control of what interest rates are doing. But we are in control of the strategies that we use. And the best thing you can ever do is invest in strategies and not symbols and stocks. And you want those strategies to be as agnostic or as neutral as possible. So you just go with the direction. And as oversimplified as that may sound, it's not simple with the emotions, but it's extremely powerful. Everything we talk about in these podcasts is about bringing back control of your wealth and your life. I hope you guys have a great weekend. Again, this is RC Peck with my weekend podcast, and I will speak with you soon. Take care.